Thank you for joining us today. I will get started right away. Here you can see the topics I will be covering in this presentation, and we will start on page 5. Firstly, a brief overview. Net sales rose 21.9% year-on-year to 359.6 billion yen. Operating profit is up 25.2% to 5.01 billion, exceeding 5 billion in the first half. And ordinary profit is also up, as you can see, 32.8% year-on-year to 4.98 billion yen. Final net profit fell this term due to the special effective tax rate applied in the previous term. Please turn to the next page. In the first 6 months of 2012, the infrastructure, media, and securities segment were all strong. In light of first half performance, last week on August 1st we announced an upward revision to our year-end forecast. Figures through to ordinary profit are forecast to rise, while a slight drop in net profit is expected. This is not due to any special losses, but simply a conservative estimate taking into account the impact of new businesses established. Moving on, please take a look at page 7. This next slide shows results on the first 6 months as a percentage of year-end forecasts. The lighter blue represents initial forecasts, and the darker blue represents revised forecasts. Both operating profit and ordinary profit are off to a strong start, over 60% of the year-end forecast at mid-year point. Net profit is at 44% of the year-end forecast. However, going into the second half, improved earnings in GG and other new businesses are expected to improve tax burden, so this percentage does not represent lagging net profit. Moving on to page 8, highlights of the first half. Despite investing 900 million yen in new businesses on the first quarter, operating profit topped 5 billion yen. The web infrastructure and e-commerce segment achieved record high net sales and profits, and performances across all segments was positive. Segment breakdown. In the web infrastructure segment, the security business until now has held the number 2 share in the domestic market. However, in this quarter, for the first time, the security business captured the number 1 share. This means that all products in the web infrastructure segment are number 1 in their respective markets. Performance in the internet media segment was driven by ad networks and smartphone-related businesses, and overall, the segment maintained strong results. The securities segment continued its aggressive expansion of market share. In the global FX market, we captured the highest share of global transaction volume of any company in the world. And thirdly, growth strategy. GG has acquired 11.7 million members worldwide, and expansion is going well. And monetization initiatives were started last month. In the new domain business, I can announce the names of all applicants and applied for streams. And later today, I will talk about evaluation process which is underway. 後ほど今後のドットショップ他の審査プロセスについて簡単に説明をさせていただきます。Moving on to the next part, starting on page 10, financial results. 決算概要のご説明となります。The condition of our profit and loss statement is as I explained during the overview. The next slide, page 11, shows balance sheet condition. For your reference, in the extract of GMO Securities balance sheet is shown on the far right-hand side. As you can see, the current asset total is 200 billion yen. However, around 80% of that is GMO customer assets. There have been no significant changes to the balance sheet in the past 3 months. Please turn to page 12. Next, let's take a look at cash flow. 8.46 billion yen was generated in operating cash flow, while 2.06 billion yen was used in investing cash flow and 4.01 billion yen was used in financing activities. At the end of the term, cash balance stood at 35.16 billion yen. Again, for your reference, GMO Click Securities figures are provided on the right. Now I'd like to move straight into the segment report. As we present every quarter, this is a diagram of group composition. The group is divided into 4 business segments. The 3 segments in the upper part of the diagram are the established business segments: web infrastructure and e-commerce, internet media, and internet securities. In the lower part of the diagram is social media and smartphone platform segment. The orange areas represent synergies in group marketing.
下の輪がソーシャルスマートフォン関連事業です。オレンジ色の部分が共同マーケティング、共同シナジー、集客のシナジーを示しております。共同マーケティング並びに集客のシナジーを示しております。
This quarter, I would like to draw your attention in particular to the web infrastructure and e-commerce segment. This is our legacy business segment. With the security business capturing the #1 share of the domestic market for the first time, all major products in the web infrastructure and e-commerce segment are now #1 in their respective markets. I'll explain again the strengths of our web infrastructure business. Consumer monopoly is the opposite of a commodity business. Well-known investor Warren Buffett has defined a number of criteria for these business types. GMO Internet Group meets 3 of those criteria. Number 1, brand. It is often thought that web infrastructure products are commodity products, and therefore it is difficult to differentiate a brand. However, GMO Internet Group has built brand value throughout its one-stop strategy, its competitor meet strategy, and by continuously providing #1 products.
結果として GMO というウェブインフラのブランド価値を生み出しつつあるという認識がございます。
Number 2, barrier to participation. Further, the web infrastructure business is a classic Talbridge model business. Both individuals and businesses who are transmitting information via the internet must continually use web infrastructure services. Our technology and skill differentiate our products and create a higher entry barrier for potential competitors. Number 3, high earnings. Our earnings structure is based on a fixed income stream from accounts paid monthly or yearly. Many of our services are low priced and revenue per user is often low. However, as I said, these are essential services for both individuals and businesses. What's more, the cost of migrating to other services can be prohibitive, and as a result, customer retention is high, and we are able to generate income based on economy of scale. Investment in upgrading facilities or research and development is also low. This also contributes to profitability. Similarly, in the net media business, customers must continue using our advertising-related services to continue advertising their businesses. This stable business growth allows us to return profits to shareholders through dividends, stock buybacks, etc. Please turn to the next page. As I said on the previous slide, all products in the infrastructure business are now #1 in their respective markets. The reason GMO Click Securities has been able to become the #1 FX provider worldwide is unquestionably its technology. GMO Internet Group has 2,470 staff, and 1/3 of, or 846 of those are engineers and creators. We plan to boost this percentage to 50% in the near future.
近い将来ここは 50% を超えるエンジニアの集合体にしていきたいというふうに考えております。
We are proud to offer some of the best benefits and support for engineers worldwide, and our technical strength will continue to allow us to keep providing number one service. Moving on, the next slides show business performance by segment. Overall, net sales increased 21.9%. If you take a look at the breakdown, you can see the growth was fairly even across all segments. Web infrastructure grew 23.9%, net media 22.2%, and net securities 11.6%. There is no particular business segment skewing growth rate. Please turn to page 17. As you can see, this is operating profit. Overall profit grew 25.2%. The breakdown shows 27.2% growth in web infrastructure, 35.7% growth in net media, and 20.2% growth in net securities. This level of profit has been achieved despite the aggressive investment in new businesses that I talked about during the last results presentation. The first segment I will report on today is web infrastructure and e-commerce. Page 19 shows composition of the web infrastructure and e-commerce business segment. The security business was previously number 2 in its market, but as you can see, it is now number 1 in terms of both market share and net growth in certificate issues. As a result of this achievement, all major products in web infrastructure segment are now number 1. Please turn to page 20. There are now 4.13 million contracts in the web infrastructure business segment. That is 68% growth in the past year. When we first entered the domain business, we expected that we would eventually see a slowdown in growth. However, growth has actually accelerated over the past 1 or 2 years. Please turn to page 21, Web Infrastructure Business Highlights. Since 2008, the security business has continued to expand its market share in Japan. In 2012, we now hold a slightly larger market share than our competitors. We cannot say yet that we are overwhelming number 1 in the market, but by continuing strengthening our products and marketing, this is the position we aim to achieve. Please turn to page 22. In the web infrastructure and e-commerce business segment, net sales grew 23.9% to 14.3 billion yen. Growth in this segment was driven by the domain, web hosting, and payment processing businesses. Please turn to page 23. This graph shows net sales and operating profit growth over the past 3 years on a quarterly basis. Growth rate has clearly accelerated since 2011. But what factors are behind the growth curve in the web infrastructure business? We believe that this graph demonstrates that our strategy of accumulating stable number 1 products has been successful. The idea that number 1 is the only position to be in has permeated group culture and is practiced every day. We expect to maintain the high growth rate going forward. Next segment I'll talk about is Internet Media segment. Net sales in the Internet Media segment totaled 12.9 billion yen. That is 22.2% year-on-year growth. The GMO Ad Partners Group, led by Shintaro Takahashi, is driving growth in this segment. Page 26 shows net sales and operating profit over the last 2 years. Year-on-year profit growth was 31%. Our ad networks and smartphone-related businesses performed particularly well. If you exclude seasonal factors that affect the business in January through to March, you can see that the segment has maintained stable growth. The fourth business segment is Internet Securities. Please turn to page 28. This slide shows business performance in the Internet Securities segment. The blue column on the left represents net sales, and the light blue column on the right is operating profit. Cost competitiveness derived from the world-class technology has allowed us to grow market share and maintain high earnings. Please turn to page 29. As you can see, we have the highest transaction volume in the Japanese FX market. Please turn to page 30. Further, this comparison with FX businesses worldwide shows that we have achieved the highest transaction volume on a global basis. I believe this demonstrates our strength in technology and price competitiveness. Please turn to page 31. On August 1st, we announced that GMO Click Holding would commence a tender offer bid for FX Prime. Today, we're still in the tender offer period, so I can only give you a rough outline. This slide shows the number of accounts and customer assets held by a target company, FX Prime. In terms of scale, the target company has about half the number of trading accounts and about a quarter of the customers' assets as GMO Click Holdings. An image of the combined number of accounts of the two companies is shown on the next slide. As you can see, this would put us at the top of the industry in terms of number of accounts. As a result of synergy generated between the two companies, we believe we can achieve the number one ranking across all parameters including customer assets and number of accounts, transaction volume, and etc. Pages 33 and 34 provide a summary of the disclosure statement filed on August 1st. Please turn to page 35. This slide shows market share by transaction volume in the securities trading market. We are number one in the FX market. However, in securities, we are currently number 3. This slide demonstrates that we are also slowly growing market share in this market. We continually strive to achieve number 1 in this market too. Finally, I'd like to talk about growth strategy in the smartphone platform and social media business segment. Firstly, on page 37, you can see net sales and operating profit and loss on the social media and smartphone platform business. This graph represents the past 2 years on a quarterly basis. We are currently investing 400 to 500 million a quarter in this business segment. The social apps business is already making profit contribution, and we expect daily deals site Kumapon to begin making a monthly profit soon. I will talk more about Gigi, the service we are most focused on, in the next part. The next item is growth strategy. Please turn to page 40. At the end of July 2012, membership had reached 11.7 million worldwide. That is growth of over 1 million new members per month. As you can see, membership growth is strong. Please turn to page 41. This is our roadmap toward profitability. Up until now, we have focused on expanding content, much of which is free. This has enabled us to achieve high rate of growth in customer acquisition. The next step was to boost activity within the platform and increase customer retention. This has been achieved by introducing social network, 3D avatars, and community features. GG is now also open platform compatible. Lastly, this year we plan to introduce titles that will enable us to monetize the service. We will start building a framework of profitability in the next term. I would say user acquisition is strong, but monetization is not yet at a level that we can discuss. However, we believe our KPI are strong. The last topic under growth strategy is new domain business. This is an update on .shop and other new domain-related businesses. Please turn to page 44. We saw this slide during our last earnings presentation. On June 13th, ICANN announced competing new GTLD applications, and we have updated this table to reflect the new information. As you can see, for .shop, we have 7 competitors including Amazon and Google. Also, we haven't previously discussed this. However, we have also submitted an application for the TLD.mail. There are 6 other competitors for this domain. This is also the first time we are announcing our application for new domain .inc. There are 10 competing applications for this domain. In regard to geographic domains, we have submitted applications for .tokyo, .nagoya, .yokohama, and .osaka. We were the only applicant for all these domains except .osaka, so we have a very high chance of receiving these domains. There is 1 competing applicant for .osaka. We also submitted 17 applications for brand TLDs. As you can see, these include Canon, Nissan, Toshiba, Hitachi, NHK, and Gree. As long as there are no trademark objections, we are very confident that these applications will succeed. Regarding profit contribution, at this point it is difficult to say. However, we already have an 80 to 90% share of the GTLD market as a registrar. We definitely have the sales strength required when new domains are released. We also expect synergies to be generated with other products areas such as web hosting. We expect .shop, .mail, and .inc to make a significant contribution to profits, while we estimated median revenues from .nagoya, .yokohama, and .osaka. In regard to brand GTLDs, our role is back-end provider, and these services will attract a fixed fee. Finally, I'd like to go over the new GTLD schedule. Please turn to page 45. We expect to launch .tokyo and other geographic TLDs in the second half of 2013 at the earliest. However, .shop and other domains that have competing applications will take longer as they go through additional processes to determine the successful applicant. According to recent announcements, ICANN expects to see new GTLDs to go live in 2014. ICANN is coordinating a global evaluation process, and therefore we should expect there could be delays of several months. In 3 to 5 years, we expect these new products to be contributing to the expansion of our infrastructure products worldwide. That brings us to the end of today's presentation. Thank you for your time today. Internet for everyone.